What if the global economy isn't being pushed to the edge by debt? What if it's being powered by it? Every headline warns us of record-breaking national debt and soaring global borrowing, yet the financial system keeps expanding. Banks keep profiting, markets keep rising, and the people who should be terrified aren't. Why? What do they know that the rest of us don't? Because behind the numbers, behind the political arguments, there's a mechanism, an invisible machine, quietly turning global debt into a continuous stream of wealth extraction. And once you see it, you can't unsee it, setting the stage 1 o'clock to understand how we got here. We need to go back to a very different world, one where money was anchored to something real. For centuries, the global economy was constrained by gold. Nations could only create as much money as their reserves allowed. Banks couldn't create endless credit. Governments couldn't borrow infinitely. But by the mid-20th century, those limits became inconvenient. Massive wars, reconstruction efforts, new welfare programs, and exploding global trade demanded flexibility. The world wanted growth. It wanted expansion. And some of the most influential financial thinkers of the era believed they had a solution: the twist. That solution removed the one thing preventing debt from spiraling out of control. Origins -150, the break from gold in 1971. The United States made a decision that would redefine global finance. It ended the convertibility of the dollar into gold. This was just a shift in policy. It was a rupture in the foundation of the world economy. With the dollar as the global reserve currency, the entire financial system moved from limited money to infinite money. Suddenly, governments could borrow without hard limits, banks could lend far beyond deposits, and financial institutions could invent new forms of debt entirely. Debt stopped being a burden and became a product. The machine had its blueprint. The rise to 35 debt becomes the fuel throughout the 1980s and 1990s. Something remarkable happened. Entire industries emerged around buying, selling, and repackaging debt. Financial markets learned that the more people borrowed, the more profit they could extract. Interest wasn't just a fit, it was a flow of wealth upward, swelling because every part of the economy depended on credit mortgages. Education, government budgets, corporate expansion, the machine grew stronger every year. Debt wasn't merely rising. It was required to keep the system running. Breaking point 315, when expansion collides with reality, then came 2008. The housing bubble burst, revealing a web of risky loans and financial products built on top of more debt. For a moment, the machine froze. Banks collapsed. Credit evaporated. Confidence shattered. The crisis exposed a truth. Without constant borrowing, the entire system breaks. But instead of redesigning it, leaders around the world made a different choice. Fallout and failed fixes for a clock, more debt, more dependency, governments bailed out banks. Central banks slashed interest rates to zero. Trillions of dollars were injected directly into markets. These weren't fixes, they were debt surged to new heights. Wealth concentrated at the top, and the machine became even more dependent on continuous expansion. Every crisis from 2008 to 2020 was met with the same response. Create more debt to solve the problems caused by too much debt. Modern parallels 445, the pattern repeats today. Global debt sits at levels once considered impossible. Some nations now spend more on interest payments than on education or infrastructure. Corporations roll over debts they can never repay. Households carry burdens that grow faster than their wages. Yet financial institutions report record profits. This isn't coincidence. It's extraction built into the architecture of the modern financial world. Takeaways 5.10.1. The global economy now depends on perpetual debt growth. Stopping it would collapse the system. 2. Interest ensures upward wealth transfer. Debt isn't neutral, it's directional. 3. Attempts to fix the system reinforce its flaws. Every crisis strengthens the machine. Closing warning, 545, the machine won't stop by itself. It can't. The only question is whether global leaders will choose to rebuild it, or wait until it breaks on its own. Call to action, 6 o'clock. If you want more clear, deep dives into the hidden forces shaping the global economy, hit the like button, subscribe, and share this video with someone who thinks debt is just a number. It's not. It's the engine and the extraction system running the world.